Hey, it's Soleil, and this is episode 503 of the Orange Pill Investor. And we got 6 minutes before the market closes, so I am trying to jump in here. No bullshitting around. I decided to work out before I did anything else today, and then I decided I needed my protein, so I'm going to try to sneak it in. Treasury's really not going anywhere, so nothing to do here or here. It'll probably just be Strive that I need to deal with. Looks like Tesla is up. My strikes are not in any danger yet. These strategies are holding steady. And really the only I don't know if it's What's up, Howard? What's up, Angry Buddha? Um it's probably just engagement farming. Like, I don't need to be in these accounts every day. Selling covered calls is pretty low maintenance. Weeklies, obviously, you should check them maybe once or twice a week, but monthlies, I mean, you could literally just trade monthlies once a month. Put them on 45 days out, come back 30 days later, roll them out to 45 again, or something similar. I think Hermes does 30 days and rolls them every week or two. So yeah, nothing really to do here, but in the 5K account, I have 200 Strive shares, and I've been bag holding, almost to my average cost, almost back up to my average cost. I guess it's been pumping over the last couple days. I have no rhyme or reason why this is happening. Ben Workman has like 20,000 word novel posts, but he can't give me even one fucking scrap of insider trading information. So I'm on my own over here. And I really, I don't do any research really on any of the miners. The extent of the market research I did on Strive is like, I know a couple of guys who work there. That's basically was my entire investment thesis. Angry Buddha, I know, has done a metric fuck ton of research and has battling AI back and forth about it and has been posting about it. But I really haven't. I'm kind of low maintenance over here. I check the premiums. If the premiums are worth it, I'll sell calls or puts, and if they're not, then I just won't bother. And in general, I mean, this is such a small investment. I think I added another 100 shares when it was like 90 cents or something. But this was such a small investment, I didn't really mind bag holding. But if this was something that I truly had lost the faith in, then I wouldn't bag hold. I would just exit that position. And, even when it was 90 cents and I would have had to taken a 50% loss, I would have just done it, right? If I cannot collect premium and I'm not confident in the stock itself, then I just cut bait and I move on and find something else. But since since I am, and probably most of us are bullish on Bitcoin, I kind of not really worried about guys that I know executing. So I know they're going to do the best they can in this trade. So I didn't really mind bag holding, 200 shares of a penny stock. It wasn't really a big deal. But with this pump, and I got 2 minutes left, so I'm going to have to click and talk. And actually, I just missed out, looks like, because this was trading for this Friday. This was 23 cents. So I was looking forward to being able to get the $2 strike and get paid 20. Unfortunately, the liquidity is not great as far as it trading in nickels. But for the weeklies at the money, there is a shitload of liquidity. So this is kind of what I've been waiting for. Not that I necessarily want to exit this position, but I hate bag holding. And you can see that this option is up 1700% today. So to be able to jump in and snag this is kind of nice. I'm going to put these in for 20, but there's no way that they will fill. I'm just going to do one. I'm going to try. I'm not, no, actually, never mind. I'm not going to bother because I only got a minute left. So I'm just going to put in 15 cents. This should automatically fill because I am off, I'm asking the bid. So insta fills. And that would, if this does go over $2 a share, then I would be called away at $2. So I'd make 10% off of the purchase price, my average cost, up to the $2, and then I get paid an extra 15. Obviously, I get to keep the premium that I could just collected. So I would get to keep the $30 regardless. Why is it saying average credit 18 cents? So they filled me. That's kind of cool. Every once in a while this does happen. And it may be because someone told me that one of the other platforms, Schwab maybe, their ticks are in pennies. So maybe the market makers, even though Robinhood would only offer me nickels, the market makers went ahead and filled me at 18 cents. So that was kind of nice. That's a little bonus right there. So I thought I was going to only get $30. I ended up getting $36. So that's nice. That's pretty cool. Yeah, so I thought I missed out on the 20, which I kind of did. But 18 is second best, I suppose. No. Oh, actually, yeah. I only have $48 of buying power here, so wasn't going to make any other trades anyway. I can't imagine that there was anything that I would have wanted to roll in here. So we'll probably just check the comments and call it a day. Let's see. Technically, premiums are only in the 5th percentile at the money near 190, 190-ish implied vol. What's up, Al? Not financial advice, but no covered calls till 8th November. Josh might be right. Oh, he's still calling for 444. So I didn't post it, but I took a picture of the TV the other day. My wife was probably like, what the fuck is wrong with him? Why is he taking a picture of the NFL scores? But I should have waited one more second for the play clock to get down to 21 seconds. But the Cowboys Denver game was 24-44 in the 4th quarter with 4 minutes and 44 seconds left. But unfortunately, I took the picture at 22 seconds on the shot clock instead of 21. So, maybe even the NFL commissioner is pulling for Bitcoin at 444. Still decently high. Going to wait till the first week of November to sell more December and January puts. Yeah, I should have checked the puts. I don't think I had any buying power anyway. But yeah, weekly cash secured put. And so what I didn't mention is that on a stock that's worth $1.60 and I got paid 18 cents, that is 10% return on capital, right? So if I bought 100 shares at $1.62, immediately sold a covered call at 2 for 18 cents, that's a little over 10% return on capital in one trading week, plus the potential call away value of another, 38 cents, so another 20% call away value. So the premiums are kind of insane. Um, if I just had $200 to my name, I don't know that I would. I mean, I guess at that point, I mean, whatever, you might as well just YOLO into something. But, um, on a larger account, putting a small bet on this is not a big deal. But if if all I could scrape together was $200, I'd probably just keep milking fiat until I had, I don't know, a grand, 2 grand, and go for something like a mining stock. It's just going to be much easier to trade with the liquidity. If Strive, drops back down to under, sub $1, then I'll just let my covered calls expire worthless. I won't even try to buy them back because it would just be, if I have to buy them back for a nickel, that's like a third of my profits. So, this might be a Monday thing. Instead of Friday being roll day, it might be more cost effective to just let these expire on Fridays and then try to put them back on. But the point is, with the high implied vol, the premiums are pretty insane still. And so to put up $150 of collateral selling a cash secured put and get paid 15 cents, that's 10% return on capital for 1 week. And I avoid these stocks because they can just, like when it was sub $1, I was kind of bag holding. But when you can find opportunities like this, they're kind of insane because if you made 10% a week for a year, I'm sure these premiums won't last 52 weeks, but if they did, that would be 520% returns for a year, assuming that you didn't reinvest in any of them. But if you took 0.1 and raised it to the, wait, where's the rest of my buttons? Where's my, no, I don't want standard. The frick? Okay. Now you're pissing me off. Where is my scientific calc? There we go. Okay. Now can I make it smaller? Thank you, for God's sake. All right. If you made 10% a week and you reinvested all of the profits weekly, you'd raise 0.1 to the 52nd, 1.1. 1 to the 52nd power. You'd make 142x returns for 1 year. So if you started with like 10 grand and you made 10%, and then you did that 52 times, you'd turn 10 grand into $1,420,429. This is completely theoretical. This is not realistic. Like, these premiums would have to continue, and you would have to take 10 grand would get you what, 5,000 shares. So you'd have to take your 5,000 shares times the 5,000 shares would get you 50 calls times 0.1. What did I get? 0.18 times 100. So then you'd have to, turn around and buy another $900 worth of shares, which would get you 45. 100 shares would be $166. So would you get another 400 shares? And then you sell 4 more covered calls, and then you get another $100 or something. So you'd have to do that in order to get that kind of exponential return. But it's not just these little cheap stocks that work this way. And this is why I started trading strategy like this. And to a certain extent, before I saw Quant Bros 1, I just didn't care about the upside, because buying 100 shares for $300, well, times 130 grand, you can sell at the money for 2% return on capital in 1 week. So if you just didn't think it was going to the moon and you're just a regular TradFi person, there's a guy, I can't remember his name, but he's always talking about the juice. He just sells covered calls like this. He just cares about the premium. And I don't think he knows a damn thing about Bitcoin or strategy, but he does like selling covered calls on strategy. And so even if you got 1.02 to the exponent and you did this 52 times, you'd get a 2.8x portfolio return in 52 weeks, even if strategy remains at 295. Now, if you only have 100 shares, then the delta on this is like 0.5. So this is a coin flip. So you'd probably only be able to get away with this for 2 weeks, and your shares would get called away. And so that's why it's not like a long-term. You really can't get away with this for very long, unless you have a bottomless pit of money and you can just continue to roll up forever. But yeah, if you try this with just 100 shares, you're going to get called away within a couple of weeks. And then if you're if you care about your strategy shares, then that would probably make you a sad panda or whatever. But TradFi people could do this and just get 2x, 3x returns for as long as this type of premium lasts. And it's in November, it was even more than this. I think it was probably 10 to 15% premiums at the money weekly. And that was how Josh Mandel was able to, and he was actually even selling in the money covered calls, but he recognized what was happening in November, and he claimed that he was spooked by the, I think he was spooked by the 42-42 plan or something. Anyway, he saw some kind of glitch in the matrix that allowed him to just make a shitload of premium on the way down. But it's kind of crazy that I'm so bullish on strategy that I'm not willing to do this, right? I'm not willing to take like a guaranteed 2-3x yearly return because I'm so afraid that strategy is going to go to 1,000 and I'll miss out on even larger returns. So adjust your priorities accordingly. And for the most part, I try to at least capture some upside. Probably around like the 80% chance of profit here. With Tasty Trades tools, I usually just go straight to the expected move. So the expected move hasn't really changed since Friday, apparently. Anywhere in between the expected move and one standard deviation line is kind of my sweet spot. And same for 45 days to expiration. This one has adjusted slightly, but yeah, usually in here is my go-to area. Hermes is like, he's up here in the nosebleed section, 10 delta, which is perfectly reasonable. You can even get 1% premium here, but you're not going to really collect that per week, right? You're going to collect that, half of that, maybe every 2 weeks, but it's still meaningful. And this would allow for 30, selling the 400 at the 10 delta would allow for 33% call away value. When I was looking at Strive, the $2 strikes was was that 20%, right? 20% call away value. But if strategy runs to 400, you know, you could book a 33% profit. Unless you were unfortunate enough to have purchased your strategy shares at the top last November and your cost basis is above 400, that would kind of suck. AB says it does take a few days of trying to sell at the ask, but they do fill. Yeah, so if you're patient, you can just put that in as a limit order. But I'm generally not. I like to be in and out when I'm doing my trades. But that is absolutely true. And you know, when I'm recording a video, I'm not gonna put that in there and then be like, okay, let's let this video play out for 48 hours. But yeah, you can definitely scrape and make your trades more efficient if you're more disciplined with your entry prices. Oh, so IV actually just come down a bit. Cheap price for calls at the moment. Let's see. We're selling puts hard when the price was 86 cents. Had to weather that vol. Yeah, that's a test of that's a gut test right there. Just because I don't know how long this environment will last. The numbers do get nuts. Yeah, it's kind of crazy because Semler was, I don't know if Semler's story was bearish or bullish, because they tried to reproduce the Saylor playbook, and they had some temporary gains, but the market just didn't reward them. And actually, the market's been pretty harsh on strategy itself. There's plenty of strategy bulls that were Saylor D riders back in November, and now just like, you can tell that they've got Saylor notifications on for the sole purpose of just going in and replying fix your stock, or you know, just whatever. And it makes me wonder if they are just bitter, or if they're actually still holding shares and just like to complain. But it's kind of funny because there's so many Insta replies, and it's, yeah, I mean, a lot of the Insta replies are bots, but some of them I literally remember being bullish and posting in the Irresponsibly Long MSTR community. And they'll reply within a minute of Saylor posting. So they have notifications on. So that's kind of wild to me. Like, you're so invested that you want to immediately reply to someone's post to troll them about the stock price. But anyway, the point is Strategy's price has been kind of punished as well. But is Semler a success story because they were able to go ahead and get acquired? So it's not like they died, but they didn't really have overwhelming success. Well, what is Semler actually? Is Semler even still available? Yeah, what happened to Semler in November? Actually, so they kind of pumped. They were at 30, and the Bitcoin pump. Bitcoin only went up November. So starting November, we're at 70. We topped out at 106. So that went up 50%. And Semler went up 100%. So that was pretty good. But then, sentiment went into the shitter since November. But I mean, that's all the Bitcoin treasury companies, and that's basically all of Bitcoin, really. We're kind of spoiled as Bitcoiners that Bitcoin being up 70% is kind of like ho hum, like nobody can even get excited about this. Spoiled brats, really. So, I mean, but I think somewhere in here, Semler was starting to trade below 1 MNAV. Right? That why they looked attractive to Strive. So I guess worst case scenario, you get bought out above your whatever you're trading at, as far as the investors are concerned, and then I don't know, the bitcoins are still doing somebody some good. Let's see. AB says we probably have only 1 to 3 months for this IV environment, pushing out premiums into more sold puts. I know the juice guy. Yeah, every once in a while somebody will remind me what his YouTube channel is, and I'm like, oh yeah, that's him. He's actually entertaining to watch, and I mostly can't disagree with everything that he says, but he seems to be completely agnostic to the tickers that he's trading. He's just all about the premiums. Let's see. I think Semler CEO needed a partnership to find their next phase. Yeah, you could tell that they were trying to engage with the community. I believe Adrian was on the board, and then Natalie Brunell. So she has a strong social media presence. So it's kind of like, hey, let's endear ourselves to the community or whatever. But so they were below 1. Let's see, the cash flowing medical business was completely discounted. Yeah, and so let's just go back to my TradFi days. So when all I cared about was premium, and before Semler had Bitcoin, this is a company that I probably would have avoided, even if the premiums were legit. And the reason is because they were waiting on, right? Weren't they waiting on like some kind of approvals? So pharmaceutical companies, they can have a lot of premium sometimes, but if that premium is based on a binary event and they are either going to get like FDA approvals or not, then you can get walloped. I think it was CRBP way back. Let me see if I traded this. Pretty sure I traded this. Where's my history? Where's my history? Huh. Is it that old? Okay. I swear I had a position in it, but let me see if I can find it. So, yeah. So this like mooned, and then I think right here they didn't get their trial. So then the bottom just fell out of it. So if you're here and you're selling cash secured puts at the 55 strike, and even if I was getting paid like $10 or something stupid, which was like 20% of the purchase price, and then the price of the stock goes down to 20 and then down to 5, you can get hammered based on the results of these trials, or pharmaceutical companies coming out with some drug and they get the approval and the stock goes from 5 to 50, but if they don't, it goes from 50 to 20. I could be confusing them with someone else, because I think this would have my my history in here. So I know a buddy of mine was trading CRBP, so maybe I didn't take a position in this, but yeah, he got stuck bag holding this for quite a long time. The point is, even though the premiums are good in some of these pharmaceutical companies, medical device companies like Semler, I'll generally stay away from them because of those binary events having so much effect on the premium. And if I do sell a cash secured put in a pharmaceutical and get paid 10%, and then it 10x's, I'm already capped at my 10% profit anyway. So the risk reward on these type of tickers really kind of isn't worth it. But when Semler owned Bitcoin, now it's a Bitcoin play, it became much more attractive. And regardless of whether they get FDA approvals or whatever the hell they're waiting for, they still own Bitcoin. So there's kind of like that in case of emergency break glass thing, right? They can just use their Bitcoin to borrow money to invest and innovate the next big thing, right? Or go back to the drawing board, and whatever reason they didn't get approved, they can satisfy the bean counters at the FDA, and they could just, try again. All right, thought I was going to do this a lot quicker, but at least I was able to make that trade before the deadline, and so I guess we will. Yeah, you're here just in time for the farewell, Dana, but I'm glad you made it. All right, be good, Joel.